Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sideways action, a little bit of that drop that we were predicting on the Bitcoin charts in the stock market. You can see how stocks have just absolutely dropped today, except for the tech side of it, which does kind of lend some support to the crypto industry. It does suggest that kind of techie risk on aspect of the market is being held up. And so Bitcoin and the rest of crypto didn't actually plunge as far as, we might have thought, even though the rest of the stock market certainly had their legs kicked out from underneath them. Guys, if we jump straight over to the Bitcoin chart, you can see that pullback that I was suggesting would be very likely due to this Alpha 9 knockout on the daily. And so if we do throw up the EMAs, you can see how the 10 SMA and the 9 EMA absolutely crossed at this last candle, and then we just had a drop, from this high of 27,700 basically all the way down to 26,900 essentially. So a pretty sizable drop thanks to that Alpha 9 knockout, which I did warn you about in the last episode. So congratulations, Alpha Fam, if you took that short. That was a pretty bold move. Of course, you can just take a look at the EMAs. They did need more room to squeeze up. And as I said, I was looking for the possibility of a little bit of a lower area on the chart, because that's what I would like to see for us to build the support necessary to pump. So I wasn't against this pullback. The rest of the charts on those short time frames did suggest we had the ability to pump, but the higher time frames were against us. And so if I just turn off these EMAs really quick, and we take a look at the 5-day chart, which did close, then you can see that we did close underneath the hold momentum level. And so what did I suggest based upon that is that we could actually, trigger a series of events that could, in fact, take us all the way down to 25,500, if not lower. So we are going to have to be on a kind of bearish watch just because of how the 5-day did close. And again, this is the old 5-day chart. I'll update it when we get closer to the next 5-day close. But you can see that the volatility pivot on the 5-day was all the way up here, and we were underneath the momentum pool. So underneath the volatility pivot, underneath the momentum pool, and there can easily be a cascade to the downside. We've seen it time and time again when we have these setups, and I told you guys be on the lookout for that. And so again, whether it was the Alpha 9 knockout or whether it was the 5-day volatility pivot and momentum pool play to the downside, if you guys were bold enough to take that short, then congratulations. Of course, that doesn't mean that I'm bearish on this chart yet. We haven't violated critical levels. Again, the critical level that is most important to me is 27,000, and bulls just continue to defend that. Even though we could have spiraled out of control to the downside, they are putting in a fairly decent defense. Now, this is going to take more time to play out, just like I couldn't tell you like how the day would close, on this a 5-day. You guys have to actually watch the charts to see where it closes at. And, I can't tell you if we're going to lose this 27 or not. But if we do, lose this lows, then I would suggest that probably 25,500 is a pretty interesting area to start to look at just based upon that 5-day closure. Guys, we can also just throw up some of our support and resistance here, and you can see that we wicked right to this resistance right here in this kind of mid-channel resistance. And so there's a lot of interest in this area. We got a rejection here, we got a bounce here, got a rejection here, and we got a rejection again. Now the cool thing is that we're still holding above this resistance over here, which was flipped into support, used as support again, and used as support once again. And guys, so that this area over here of 26.5 to essentially that 27,000 I've been talking about, it has been very supportive in this area, and I'm not going to knock this chart unless we lose that 26, essentially, let's just call it 550, in which case we might go at a second try of defeating this wick down here. And just based upon these supports, I could easily see us dropping down to that $25,300 area. So essentially where that neutral point of control was on the 5-day. So you can see that our support and resistances and our momentum and volatility profiles are very much aligning here on these higher time frames. And while I do believe that the charts are being driven by the 2-week, and the 2-week is going to be stable as long as we're above 27,000, we have to remember that some of these other time frames, like the 5-day and the weekly, they get to hear their voice heard. They get to have their voice heard. We saw the 3-day, the old 3-day have the exact same setup up here. That's what drove us down. As the 5-day had that setup, the 3-day had theirs up here, which I showed you in the last episode, and that just drove us all the way down. So it could happen again, and just don't ignore the voices of those higher time frame, charts, guys. That being said, we can take a look at the shorter time frames just to see if there's any possible plays. Let's go ahead and go back to the 6-hour over here, and let's just remind us of the trend that we're in overall on these charts. And you can see that based upon this, this macro trend to the upside, we kind of, oops, we kind of lost it as support over here. We've been playing the kind of simple harmonic motion. We've broken down now from the midline. We perfectly retested my midline. You can see that perfect test, perfect retest. Okay, guys. So we have now perfectly retested my midline there. And while we're getting support at that 26.5, 27,000 area, it could easily break down and drop us to this 25.3. Even as low as 24,000 inside of this area. And then we would have a chance to recover from that, similar to what we did over here. Now, if we did wick down lower than, let's just say 23,800, then I would suggest that 24,000 could end up being flipped into a resistance, and then we might try for that 21 to perhaps 23. There's some midline in here area on the charts. Um, but we can talk about that at a later time. That's not what I'm calling for right now, Alpha Fam. We do, of course, have to be aware of that head and shoulders that can take us down to that area, though. So that's why, of course, I'm mentioning it. The measured move on that, adjusted for log scale, we're on the log scale right now because we're looking at parabolic growth. That the measured move is going to take us down into this $23,000 to $22,000 area should we break down. And that's why it's so critical for us to recover support up here. And it just as time goes by, it's more likely that we're going to drop down because we're putting a lot of pressure on that support, and eventually buyers might get exhausted if we don't break to the upside here. So just keep in mind, it's still very, very, very 50-50, okay? Anyone calling up only or anyone calling down only, they're really not in a place to be doing that just yet, okay? Let's see here. Of course, we also have this channel, which I did, kind of reimagine our trend just to suggest what might be going on in this smaller area here. And on that basis, you can see that we did get a nice support off of that 2-week critical level. Of course, I am playing the 2-week chart. And so as long as we hold that, I feel no problems whatsoever. We got a nice bounce on this diagonal, right, which is basically took care of us 2 times in the past, and it's sort of doing it again. I wouldn't mind dipping all the way down to 26.5, even some type of a flash wick into this 26 area, just to give us a little bit more rocket fuel, give us that nice W structure to take us to the upside. But if in fact we just have some type of a V-shaped recovery here, and it's kind of looking like it, okay? It's kind of looking like it. Then that also wouldn't be too bad, and I could easily imagine us coming up to this 28.5, maybe even $29,000 area, and perhaps getting rejected there, and let's go from there if the bullish scenario does play out. Guys, that's that for the reimagined channel. I think this one has been very successful, just as successful as that macro channel, but as a more local channel. I just want to say, it's looking pretty good. And one thing that can back me up, at least in that concept right now, is that we do have the Bollinger Bands on the 6 hour, which are giving us a little bit of a hint that we are being supported in this area. Now, when we've had a nice curl on that, assuming it doesn't get lost, but when we've had a nice curl on that in the past, we've had some explosive action inside of this channel in particular. Now you can see other areas, there's maybe a bit more of a wobble or whatnot, and so this isn't a perfect system or anything, and you just can't use it by itself. But at least in this channel, it's been very successful so far, and so this would be a great hint to me that maybe we do have a shot at the upside, at least based upon how the 6 hour is oriented at this moment. If we lose that 27,000, then I'm going to be looking for that W structure. And if we lose, this kind of 25.8, let's just say 25.7 kind of area, this wick over here, then maybe those deeper plays are just going to just cascade in motion. We could get as low as that's 22. You can see this huge area over here, right? And so 22 or 23 definitely could be in play for the next stop down should we lose this diagonal. Okay, that's enough for the reimagined channel. I do want to offer just a little bit more, reimaginations of the chart here. So I am going to just throw on a wedge that I've been thinking about. Now, this wedge, of course, would be potentially a bullish structure. It could potentially be a bullish structure. Here we have 1, 2. You could imagine us getting all the way up to that 29, look, 28.8, 29 area, and then maybe even coming all the way back down again. So 1, 2, 3, 4, 5 for a classic 5 wave and a falling wedge, and then maybe a breakout, and then trying to take out our highs. And so this could be quite a boring time, but it could end up being quite bullish. And then we would take some type of extension on the flag, and maybe we could get up to these areas, perhaps even higher than 32K. But that's again a little bit in the future. But just to keep that kind of optimistic perspective, I am still considering that. Of course, this doesn't have to be a 5 wave. It could just be some type of ABC, and then we break out. But And based upon the concentration of the midlines here, where they are coming to an apex pretty close, that could be a distinct possibility where we just push up here and then go. But I'm just not counting on that unless we get some type of really good news in the market, right? So don't count your chickens before they're hatched. Right now, again, it is very 50-50, but I want to show you how the perma bears, right, they are not telling you the full story, and I'm trying to show you both stories, because as traders, we're not going to be perma bulls, we're not going to be perma bears, we're just going to be clever little alpha monkeys and put food on our table, guys, trading whichever way the market decides to go. Let's go ahead and just put on the new 6-hour key levels to watch over here. And you can see the range that we are operating in. Okay, so we are securely within that range. We are at support, in my opinion. And so that does suggest that as long as we hold this 26 kind of 8-ish area, that we could push up to a 2027 once again. And, the key levels that we're going to be looking for here is, to hold 27,040, then we're going to be maintaining our current momentum on the 6-hour. If we do lose 27,000, then we could fall first all the way down to a 26,740, where we would probably catch some support over here. Breaking down there, you can see we're going to cross the midline of this support, and easily we could fall to that 25,003. So you see how the bearish control zone could put us in significant danger. Crossing the midline up here of this resistance area, however, around 27,800 could be quite bullish, and that could be what sends us to 28.4, 28.8, and should we be able to flip that area, then 29, maybe even 30. Okay, so guys, just keep in mind that if you do want to get super bullish, we need to get above 27,810, basically 28,000, the same thing that I had in the title of the last episode that I put out. We have to flip 28,000 for bulls to continue. Unfortunately for us, we have the volatility pivot at our head on this above our head right now, which does put pressure to the downside. And so you do see these candles being repressed. And so that pivot is currently at 27,450. Now we could pop up and visit that area, but it's just going to be it's going to be very hard work to push through there. So maybe we could push through the neutral point of control at 27,215, and then we're going to prove to the bulls that we perhaps have what it takes, and then maybe we could do a second chance, right? A second chance, as long as we don't violate these critical low areas. And so, guys, that's the story of Bitcoin. Bitcoin on the 6-hour. That's the narrative that you need to know, and the key levels that you need to watch if you're doing these kind of short term plays within this range here. Let's jump over to the daily, and on the daily, you can see that the Bollinger Bands are quite over our head. So just like what I was saying on the 6-hour, right, that $28,000 area, that's right where that Bollinger Band is. Again, we're going to have to flip it in order to look bullish. And currently it's pointed down, which would suggest that we're going to maybe have a rejection. We already got rejected there once the other day, but we could potentially have yet another rejection there and really have to put in some serious work. So just it might be a good place to take profit at this neutral point of control, somewhere around 27,930. The bulls don't get in control on the daily chart until 29.7, so 30,000, taking out these wicks up here. That would suggest continuation perhaps up to 32,000. If we do want to just maintain our current bullish posture, we do have to stay above the momentum pool's hold level at 27,035. So very, very similar to the 6-hour chart. And the good news for the daily bulls is that the volatility pivot is at our back, lending support to us here at 26,575. Now, if we do lose the momentum pool, it is possible that we check back to this bearish control zone at 26,715, and we really wouldn't want to lose that too significantly. It's okay to have a wick, just like these weird little wicks over here and these weird little wicks. It's okay as long as we have pressure to the upside and quickly get above it. But we don't want to be closing any 4-hour candles under this area. Just a little bit of fear of God would be perfectly healthy. But uh, otherwise, you understand the areas that we're looking for here. Currently, we're just resting at the general continuation level. I do like this right now. For me, it suggests that we could have a second chance, but again, it's just very borderline. I would prefer if we were above the momentum pool at 27,290, so basically 27,300. I'm going to be feeling a lot more confident about the potential for an upward play here on the daily. Let's go ahead and just take off our Bollinger Bands here, and let's put on our complex EMAs and just take a look and see what may be going on today. Yeah, and so you can see here that based upon the 4 EMAs, we are above the 4 SMA and the 4 EMA, and we are getting in a bit of a squeeze. We are being repressed by that alpha 9 knockout. The 10 SMA is pushing down on us, but if we do just get a hint above that, probably somewhere around 27,200, then we should be able to push up to 27,300, and then we're going to be in a nice squeeze play that could take us potentially up to 27,6 and maybe even 27,7 before we encounter any significant resistance on the daily here. If we go down to the 6-hour, just to see how that's working on the 6-hour, and yeah, we have the 300 supporting us. We do have the 300 SMA kind of, making room for us, so that's no problem. We are underneath the 9 EMA just by a hair, and now we're above it. Now we're below it. And so, yeah, I mean, if I really zoom in here, I can see that we are getting, it's just almost indetectable. We are getting a 4-9 squeeze to the upside. So I do think that we could get that a 27 136, and then maybe we just start to contend with a little bit of these crossed EMAs over here. It should take a little bit of work, but I do like that supportive 300 underneath us at 2730. That is a very nice supportive little area there, and you can see our wicks had a squeeze through the 20 SMA and the 300 EMA, which is what is putting us in this posture. So yeah, I mean, on the short time frame, this is a very vulnerable position because we don't want to be underneath the 4, underneath the 9, underneath the 21, bearish, bearish, bearish. But just the orientation of them suggests that within a few more 6-hour candles, maybe a couple more, there could be the potential for a squeeze. So again, just very 50-50. Nice support underneath us at 27, at 26,950 right now. So on the 6-hour, I'm just not too concerned. If anything, this could be sideways and then maybe a pop up or down just to the range low, just these kind of like short-term range lows or short-term range highs here. Yeah, unfortunately, I can't really predict anything more than that, except to say that we do have a little bit of a nice uptrend here on this structure. So if this is a higher low, and it does look like a higher low structure on the 6-hour, then I would be looking for a higher high next. Okay, so again, like that 27.6 to 28K area would be where I'm looking at. And we do have that 200 EMA right there at 27.7 on the 6-hour. So again, this range looks like it wants to be retested, assuming that we can hold this little micro squeeze right here. Yep. Let's go ahead and just take a look at how the weekly is doing. And of course, the weekly is going to be looking much sicker. We did close underneath the 9 EMA, which is always a bad sign. And we tried to get back above it. We tried to get back above the 4, but we just weren't able to. And so, it's really do or die time, guys. Like we have this 200 SMA coming throughout the middle of the chart here, trying to just support us, giving us a little bit of moral support, and we need to get up to that $28,000 area in order to start to recover this candle more than 50%, which would give us a hint at the possibility for continuation, and then get above that 29 to take out these candles, to perhaps go to a 32. But yeah, we just have our work cut out for us, okay? We do have a lot of support here at that 25,300-ish area, 25,000. So if we do drop again, 26, 25.3, 25 is going to be the first stops, and then we'll see, do we get into a bigger squeeze to the downside, or can we, narrowly escape that, okay? Guys, that was your alpha for the day. Stay safe and happy trading.